Hello guys, welcome back to another video. So in this video we are going to see CA Intermediate paper number 3A income tax amendments which is applicable for May 2025, September 2025 and January 2026. So up to Finance Act 2024, 23/7/2024 all amendments we will cover in this video. Okay guys. So this 23/7/2024 date we should mandatorily remember because many of the amendments are based on this date only, so we need to remember this date. Okay, let's begin. So before entering into the concept, we need to first understand for our upcoming exams what is previous year and what is assessment year. So for May 2025 examination, our previous year is 24-25 and assessment year is 25-26. Okay, first we will begin with first chapter, basic concept. In this there is an amendment in section 115 BAC default tax regime. The slab rates has been revised for assessment year 2025 to 26. Before this amendment we add like up to 3 lakh nil, 3 to 6 lakh 5%, 6 to 9 lakh 15%, 9 to 12 lakh, 12 to 15, above 15. This has been revised as 3 to 7 lakh 5%, 7 lakh 1 to 10 lakh 10%, 10 lakh 1 to 12 lakh 15%, 12 lakh 1 to 15 lakh 20%, above 15 lakh 30%. So this was the major change in section 115 BAC. The slab rates has been revised for assessment year 25-26. We should note this point. Then second amendment in first chapter is standard deduction. Before this amendment, it generally we have 115 BAC optional tax regime. For both, standard deduction is 50,000, but now optional tax regime 50,000. For 115 BAC, that is default tax regime, standard deduction has been increased from 50,000 to 75,000. So for optional tax regime 50,000, for default tax regime it has been increased to 75,000. The next amendment is special income tax rate. Special income tax rate means which is not a slab rate, it is a flat rate. For example, for lottery, flat rate is 30% and we have flat rate for long term capital gain, short term capital gain. So in this first section is 112A. This is long term capital gain on listed equity shares. Long term capital gain on listed equity shares. Before this amendment, we have flat rate for this section is 10% exceeding 1 lakh. That means up to 1 lakh we have no tax. If our long term capital gain exceeds 1 lakh, then 10% tax will be levied. But after this amendment, it has been classified as transfer before after. So transfer before 23/7/2024, transfer after 23/7/2024. If we have transferred our listed equity share before 23/7/2024, then tax on our long term capital gain will be 10% on long term capital gain exceeding 1.25 lakhs. Okay, if we have transferred our shares after 23/7/2024, then tax will be 12.5% exceeding 1.25 lakhs. So previously we had like 10% tax exceeding 1 lakh, up to 1 lakh no tax. If our long term capital gain exceeds 1 lakh, then 10% tax will be levied. This is previously. For this this assessment year, for our upcoming exams, this has been classified as before and after. If we have transferred our listed equity shares before 23/7/2024, then tax will be 10% on our capital gain exceeding 1.25 lakhs. If we are transferred on or after 23/7/2024, then our tax will be 12.5% exceeding 1.25 lakhs. This 10% has been increased at 12.5% if we have transferred after 23/7/2024, and this 1 lakh limit has been increased as 1.25 lakhs. Then for this we should satisfy some conditions like STT should be paid, tax should be paid. Then chapter 6 deduction is not allowed. Rebate under section 87A is also not allowed. Then section 11A, this is short term capital gain on listed equity share. Previously we saw 112A long term capital gain. Now short term capital gain on listed equity shares. This also classified as transfer before, transfer after. If you transfer your asset before 23/7/2024, then your tax will be 15%. After 23/7/2024, then tax will be 20%. Before this amendment, we had only one tax rate, that is 15%. Now it has been classified as two, before and after. Before 15%, after 20%. Then next section 112, long term capital gain, which is other than 112A. That is other than listed equity shares. Any long term capital asset you transferred and you earned capital gain, then for you tax will be classified as again transfer before, transfer after. Transfer before 23/7/2024, transfer after 23/7/2024. If you are transfer before, then for you tax will be 20% with indexation. If you are transferred after 23/7/2024, land, building both acquired before 23/7/2024 by resident individuals but transferred after 23/7/2024, then tax will be 20% with indexation or 12.5% without indexation, whichever is lower. 20% with indexation or 12.5% without indexation, whichever is lower should be taken. Any other capital assets 12.5% without indexation. So these are the major amendments in first chapter, basic concepts. So next, in second chapter, residential status, there is no amendments. Third chapter, house property, no amendments. Fourth chapter, salary, this amendment we already saw in first chapter, basic concept. That is, previously it was like for optional tax regime and 115 BAC, for both standard deduction is 50,000, same only. But now for 115 BAC alone, the standard deduction has been increased from 50,000 to 75,000. Then second amendment in salary is rent free accommodation. If accommodation is provided by any other employer other than government, then rate will be population. If a person is living in the city where there is a population more than 40 lakh, then rate will be 10% of salary. More than 15 lakh, lesser than or equal to 40 lakh, 7.5% of salary. In other cases, 5% of salary. Before this amendment, it was like 25 lakh, greater than 25 lakh, 15%, 10 to 25 lakh, 10%, other cases 7.5%. This has been revised as more than 40 lakh, 10% of salary, more than 15 lakh, lesser than or equal to 40 lakh, 7.5% of salary, other cases 5% of salary. Okay, these are the two amendments in salary chapter. Then we will move to PGBP chapter. Okay, in PGBP chapter, there is a section 40B. In 40B, interest to partners. Interest to partners, generally, if authorized by the partnership deed, then up to 12% is allowed. More than 12% is disallowed. There is no changes in this concept, interest to partners. Okay, there is a change in remuneration to working partners. So to calculate remuneration to working partners, first we need to take actual remuneration to working partners, then we need to calculate maximum remuneration allowed. Maximum remuneration allowed should be calculated as for up to 6 lakhs of book profits, a year of 3 lakhs or 90% of book profit should be taken, then 60% of balance book profit should be taken. This is the amended provision. Before this amendment, we had like up to 3 lakhs, a year of 1.5 lakhs or 90% of book profits, balance 60% of book profits, whichever is lower. Now this has been amended as, this has been doubled. Up to 3 lakhs we had before, now we have 6 lakhs and 1.5 lakhs has been increased to 3 lakhs. So this is the new provision for PGBP. Remuneration to working partners should be calculated as per the new provision. So we have to first take actual remuneration to working partners, then we need to calculate maximum remuneration allowed. To calculate this, up to 6 lakhs of book profits, a year of 3 lakhs or 90% of book profits should be taken, then 60% of balance book profits, actual remuneration or maximum remuneration allowed, whichever is lower should be taken as answer. Then this is one important amendment, like if we have one residential property, I am letting out the residential property. I have one residential property, I am letting out a residential property. We need to check the purpose. For what purpose I am letting out, whether I am letting out for business purpose or non-business purpose. If non-business purpose, then we need to the tax will be levied in house property chapter in the heads of house property. If for business purpose I am letting out my residential property, then previously it was taxed in PGBP, but now it has been amended as even if your residential property letting out for business purpose, the tax will be levied in income from house property, not in PGBP. Then next, section 36(1)(4)(a), employees contribution towards pension scheme under section 80 CCD. In this, total deduction allowed is actual contribution, actually how much employer contributed, then 14% of salary. Salary means basic plus DA forming part. Whichever is lower will be allowed as deduction. Then these are the amendments in PGBP chapter. Then we will move to capital gains. Okay, first we all know capital gains classified into two: short term capital gain, long term capital gain. But we need to identify how to classify this, how we can come to the decision that this is short term, this is long term. This will be identified with the help of holding period. So for this holding period, previously we had like 36 months, 12 months, 24 months. So these are the three boxes. First box is general box, 36 months. In 12 months, zero coupon bonds, units of mutual fund, listed securities will be come under 12 months category. Then in 24 months category, immovable property and unlisted shares will fall under immovable 24 months. Previously we had like this, but after amendment, 36 months box has been totally removed. We have only two category, 12 months and 24 months category. For 12 months we already know 12 months for zero coupon bonds, units of mutual fund, securities, listed securities. Other than this three items, three capital assets like zero coupon bonds, units of mutual funds, listed securities, everything will fall under 24 months box. 24 months box. Okay, what does mean by this 12 months, 24 months means if your capital asset, if you hold your capital asset more than 24 months, it will fall under long term capital gain, long term capital asset. If you are sold or transferred your capital asset before 24 months or before 12 months, then your asset will be classified as short term asset, short term capital asset. Okay, now we have only two categories, 12 months and 24 months. 36 months category has been totally removed. Then one important amendment is indexation benefit. Usually we will calculate our capital gains like sales value minus expenses minus for long term capital gain indexed cost of acquisition minus indexed cost of improvement long term capital gain. Now after this amendment, indexation concept totally removed. If you transferred your capital asset after 23/7/2024, if you transferred your capital asset after 23/7/2024, then you will not get any indexation benefit. Directly you need to minus cost of acquisition minus cost of indexation. No indexation benefit will be available. So if your asset transferred before 23/7/2024, indexation benefit will be available, but if you have transferred after 23/7/2024, not available. So next amendment is section 46A, capital gains on buyback of shares or specified securities. Specified securities means ESOP, like employee stock options shares. In case of shares other than shares of domestic companies or specified companies, if a company has buyback the shares from shareholders, in the hands of the company there will be no tax, but in the hands of the shareholders we need to calculate tax like buyback price minus cost of acquisition, long term capital gain. In this long term capital gain we will be calculating our tax. So to decide whether this is long term or short term, we need to identify with the help of period of holding. So period of holding is date from date of acquisition, the date you bought the shares, till date of buyback by the company. So this is a new one. Like in case of shares of domestic company, listed as well as unlisted shares, for company TDS as 194 to be deducted, but in the hands of the shareholder taxable under income from other sources as dividend income, capital gain is to be applicable. For example, I bought shares for rupees 60 rupees from the company. Company buy back this share for 100 rupees. So this difference 40 rupees is gain for me. So this will be treated as dividend in income from income from other sources, and tax will be levied in IFOS. Then one important amendment, section 50A. Unlisted bonds or debentures transferred on or after 23/7/24 is always considered as short-term capital gain. Bonds or debentures transferred on or after 23/7/2024 is always considered as short-term capital gain. So this is one important provision. Then these are the capital gain chapter amendments. So let's move to next chapter, income from other sources. In income from other sources, family pension we already know, like family pension deduction is allowed as 15,000 or 1/3 of such income, whichever is lower. But after amendment, this 15,000 has been revised at 25,000 or 1/3 of such income, whichever is less will be allowed as deduction. And in IFOS, section 56 subsection 2 7B has been removed. Then in deduction chapter, section 80 CCD D2, employer's contribution to NPS for the benefit of the employee. In this, deduction amount is employer's contribution or 10% of salary basic plus DA forming part, whichever is lower will be allowed as deduction. If you have opted for 115 BAC in default tax regime, this 10% of salary is revised as 14% salary instead of 10%. So if you are opted to default tax regime, then deduction amount will be employee's contribution or 14% of salary basic plus DA forming part, whichever is lower will be allowed as deduction. Then we will be moving to TDS rate change. So for some of the sessions, TDS rates has been revised. So like 194D, 194G, 194H, these three are commission based sections. For this, old rate is 5%, new has been reduced to 2%, and 194DA maturity of proceeds of life insurance, 194IB renting of immovable property, 194H commission or brokerage, 194O 5% has been revised as 2%, and for 194O 1% has been revised as 0.1%. So for if you see overall 5% tax rate has been revised and reduced to 2%. So these are the changes in TDS chapter. Then one important line, services covered under 194J. 194J means professional services. This section will be applicable to professional persons. So any services in professional category will not be considered under the definition of work under section 194C. So definition of work under section 194C will not consider services provided by professionals. So this point should be remembered. Then last chapter, return of income. In return of income, section 139AA says that quoting of Aadhaar number is mandatory for all eligible persons. This can be done by two ways: application form for allotment of PAN and while doing our return of income. There is another provision. Previously we have another provision. If not having Aadhaar number, we can quote by using enrollment ID. This provision has been entirely removed. We have only two options: application form for allotment of PAN or return of income for quoting of Aadhaar number. So these are the major amendments applicable for May 2025 examination. I hope so this video very useful for you guys. Thank you guys. Bye.